I know a lot of people today who are using BNPL apps or credit cards, for everything from like a small Myntra payment
Yeah.
or vacations, or of course buying some electronic thing. Um, when does it become dangerous? What warning signs should we look out for? Because we all are going to do it.
It's a great point. I think there's a couple of ways to think about it, and I really hate this preaching that we sometimes hear, especially from financial influencers, that you shouldn't use credit for consumption, et cetera, et cetera. That's a bit patronizing. I trust that most people can differentiate good credit and bad credit.
Not only patronizing, it's exactly like saying don't have any sugar.
Yeah, don't eat cakes.
Great.
On your birthday, you should have a cake. Of course
we're
you
human.
should.
A little more than your birthday.
Yeah, maybe once a week.
I know you're very
I eat a lot of cakes.
Oh, you do? Okay.
So it's exactly the same. So a couple of things to always think about. One is, if I take out this loan, is it somehow improving my life, right? Is it somehow adding experience to my life? Versus I just suddenly wanted a dopamine hit from buying this thing. So impulse spending, buying a new shirt or something on Myntra, is probably not the best use of credit. Use that for when you have excess surplus, right? When you've just been given a bonus or some money for a wedding or birthday, whatever. That's the time to make those splurges. Credit should always be for what we call planned purchases. Is it something you need in your life? That doesn't mean it can't be a consumption thing. I am actually not even against people taking credit for a holiday if it's done sensibly with planning. You were planning to make that purchase anyway. And the availability of credit does not make you buy a more expensive item. Always live within your means. One of the unfortunate sides of credit, especially when you're young, is you always think you'll be richer in the future when that repayment comes due. Imagine a scenario where you're not. If your income stays exactly the same, bit depressing, can you still afford all these things? Are they, congruent with your current income earning potential? Don't factor in any improvement. Very important.
That's a good point. So when you take a loan, keep your current salary as the base for the future as well.
Absolutely.
Do not extrapolate
never.
Any future earnings into your current loan. You have
really important.
You have to be able to pay your current loan.
Correct.
With your current earnings.
Exactly.
Just be in the present. Basically.
Yeah. Just think about what you take home today. Would I still buy this today if I had to pay the full amount? That's really important. If availability of credit suddenly makes you buy something 2 or 3 times more expensive than you would naturally have felt comfortable buying, then it's wrong. That is not correct. That's really important.
The Reserve Bank of India has tightened rules on BNPL. How does that, affect young customers?
Yeah. Actually, it's really good, in my opinion. I think a lot of the challenges that we've been discussing, right, which is that, look, young people all over the world always are more risk-taking, more optimistic, and those types of characteristics lead to the higher credit burden that we're seeing. And there's some really frightening stuff coming out of the data. It looks like something like a third of all personal loans today are going to people who have more than 5 outstanding loans at the moment. And if you just think about how it feels to have any debt outstanding in your life, having 5 or 6 on top of your head is a very, very burdensome feeling for most people.
And that person who has 5 or 6 loans is the prime target.
Correct.
Because for all the reasons we mentioned.
Correct. He'll be targeted by the BNPLs, by the fintechs, because what's the problem of adding another few thousand rupees to his burden, right?
That's basically predatory lending.
Correct.
Basically. It's a classic example.
So that's what I think regulators are clamping down on. They're trying to make it harder for the behavior you've described, which is that impulsiveness of taking credit. There's a few things they've done. One I really like is called a key facts statement, KFS. Before you take any loan, the lender has to prove that you have read a key fact statement about the loan. Print. Exactly. And it has to be presented in a way that a customer can read it. It can't be 30 pages. It's supposed to be 1 page with the key terms, conditions, prices, etc. And they're actually not allowed to disperse the loan or let the transaction happen until they prove that you have read that. Now that obviously can get flouted. There are ways people
And I mean, the usual
smooth
thing.
it out.
You have to just scroll down and say
Yeah,
agree.
maybe. But I would honestly say, and I'm biased, but as a customer, do read it. It's fascinating. There'll be interesting.
It's
kind
one
of-
page.
Yeah, it's
Well,
normally
then you
one
have
page.
less of an excuse.
Exactly. And it's normally written in plain English or, simple language. So
Right.
just try and read it. It's useful. It's interesting. Plus, it gives you that pause to remember, I
Right.
am taking on a loan.
A loan.
This is
It's
a
a loan.
burden.
It's
Exactly.
something my parents
Told me not to do.
never to do in my
Exactly.
life. I'm taking on a
Exactly.
loan. Right.
So I really like that. I think the regulator is being very thoughtful and they understand how young people behave. They're not banning any of this. They're saying, let's just create those pauses, those moments to reflect before somebody takes on another burden. Obviously, there's been a big challenge in the market of unregulated lending apps, and I think we shouldn't shy away from mentioning that. It's very easy in the digital world to spin up an app. You know that. You can all create an app in a day, and unscrupulous people will do that without the backing of a regulated bank or MBFC. So it's literally a fake loan app. They will give you money easily, but then they will harass you to get that money back. RBI are very, very good at clamping down on this phenomenon. But again, you should take it into your own hands. Make sure that whenever you're engaging with what you think is a lending app, that it is a regulated legal entity. And you can...
What are the biggest red flags that I should look for
Yeah,
when I'm looking at, a lending app pops up?
great question. First of all, it will be very easy. So they'll make the process super, super straightforward. Lending shouldn't be that easy. There is some friction when you take a loan. A lender should be assessing your credit score. They should be assessing your income. If they don't do any of that, if they give you instant cash, be a little bit alarmed. That's not really a good sign. Secondly, if there's no KYC, it's almost definitely illegal. KYC is an absolute must for everything. You know that. Everything in life requires KYC. You want to go to a swimming pool, you have to do KYC. So if someone is giving you money without KYC, be very suspicious, be very alarmed. And then I think third red flag, very important one, are they asking for strange information from you? A very classic telltale sign is if they ask you to share your contact list from your phone, okay? We all give permission for all sorts of things in this day and age, but when it comes to lending, be very careful. It's not legal for a lender to take permission of your contact list. That is not allowed under the RBI guidelines, and RBI are very, very good at cracking down on this.